Palantir. I thought I would start with just showing you a couple shocking things. Okay, year to date now at this point in time, Palantir is up 138%. And you know what's crazy? Okay, think about this for a moment. This is nuts to think about. I mean, when I went into this year, I was down on Palantir, right? I was red. I was red on Palantir. And now we're up 93% on the stock, up $35,000. Now, when a move happens that fast, some people are going to say, bubble, it's going to pop. It's too much. It's too much too fast, right? It's not how the stock market works. It's never been how the stock market works. Why don't I go ahead and show you this, okay? 30 months ago, since 30 months ago, in January 2021, this stock is down almost 40%, right? I could just as easily as I could dismiss the most recent move and say it's a bubble, I could easily say Palantir is the most undervalued stock in the world. The stock price hasn't gone anywhere for 30 months. It's absolutely ridiculous. Look at all the growth the company's had. Look at everything they're doing. Look at how much the company's grown. Look at the employee force they've added to. And yet the stock hasn't done anything in 30 months, right? So you can never really just justify by saying the stock's gone up so much or down so much, so therefore it's a huge deal or it's a huge bubble. It doesn't work like that. Never has worked like that, okay? And if we go ahead and take a peek since December 2022, right, the stock price is up a whopping 154%. Nonetheless, folks, it has had quite a move. Now, remember what CARP used to say, okay? CARP would say, we're expecting to grow the revenues 30% a year on average, right? And then they backed away from that that's probably about a year ago now at this point in time, okay? If Palantir really has this sort of demand that we think it's likely having now at this point in time, there's very much a possibility that CARP could go back in next conference call and say, you know what, we're back to being confident we're going to grow 30% plus a year on average for many years to go in the future. If Alex Karp goes ahead and says that and commits to that again, it's massive for the stock price because you got a bunch of analysts that are expecting 12 to 18% revenue growth. If all of a sudden you're talking about we're going to grow 30% plus, we're getting back, there's also a scenario that could play out that it's such a shocking number that no one even anticipated that, right? Where does the stock go from here? Okay, because I understand there's a lot of people that are kind of thinking, where does the stock go from here? My opinion is this stock probably chills in the $14 to $16.50 range, or $14.50 to $16.50 for probably the next, I would say, 2 months, unless we get more big news. Like, let's say there's a scenario where Alex, the CARP and the team come out and say we're going to do revenues of 30% next quarter, something like that, or they say we're growing much more quickly than we thought we were going to grow, so we're actually going to come in with likely revenue of blah 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 next quarter. Like, if something happens between now and the next earnings period, that's kind of like shocking news, then Palantir is going to have its next level of growth. If they land some new huge contract on the government side or the commercial side, that's something where, next thing you know, stock's probably $17, $18, $19 at that point in time. But if we don't get any big news between now and the next earnings period, then we'll be just kind of chilling for a bit here, $14.50 to $16.50. So, you never really know. Things are developing so quickly. You never know when the next big deal could be announced tomorrow, the next week, next month. You never know if all of a sudden CARP and the team says, comes out with a press release and says, we're growing double, triple the rate that analysts thought we were going to grow. We're going to put out preliminary revenue of blah 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 number for next quarter, and let's say it's massively more than what analysts expect. That's a needle mover, and that's something that would keep the stock moving at that point in time. The worst case scenario for Palantir is there's no news no big news, that is, right, between now and the next earnings period. And next earnings period numbers were to just come in kind of sluggish and revenue wasn't that exciting. If that's a situation, then the stock would fall down quite a bit, at least a 20 to 40% fall from here if that scenario happened. But based upon everything we're hearing, it doesn't look like that's too realistic, folks. And so Palantir's in a pretty good spot. We're in probably a chill zone here for a bit. And if we get big news, then the momentum's going to continue and it's going to be a even more fun ride than ever, okay? So there's 3 main reasons why I sell a stock ever, okay? These are the 3 reasons. The first one is if the company's gone fundamentally bad, okay? This could mean a lot of different things. That could mean the financials have gotten really bad for the company. That could mean the management team has gotten much worse and way worse than you anticipated. Basically, the company, what you thought was going to happen, didn't happen. You were wrong, okay? And I can tell you certainly there's been plenty of stocks over the last 15 years that I just got wrong, right? And the fundamentals didn't play out the way I thought they were going to play out. And things got worse and worse and worse. And so eventually you have to say, this isn't working. Like, it's just the story's getting worse and worse and worse. And at some point in time, you got to cut it, right? And usually when things are getting fundamentally worse over 2-3 quarters, usually that's when you want to pull the trigger and say, you know what, I'm about done with this story. I'm moving on to better, brighter stocks, because there's thousands of stocks in the stock market, right? And if there's one thing I battle with is a strong... It's tough when you're a long-term investor and you're thinking long-term, but a company's coming in with the fundamentals getting worse and worse to make that decision to go ahead and cut, okay? Now, in this particular stock situation, it was not a fundamentals bad situation, okay? Not at all in regards to this. Good management team. Actually, the fundamentals are getting a little bit better, at least in the short term for this company. I do have a little worries about the long term, okay? Number 2, de-risking portfolio. So this can be a scenario where you're just too heavy into a position and you're looking and you're thinking about the risk in regards to that, what it means to your overall portfolio. So let's say, you got 20% in a stock and you think that stock's severely overvalued. Let's say there's a situation where you think there's major competitive threats that could really jeopardize that business model. Let's say there's major legal problems that company could risk. And you're like, I need to de-risk. That's an opportunity there, right? And the third way that I would usually sell a stock is if I buy a stock and it's in no man's land. What does this mean essentially? This is when I start buying a position into a stock, maybe put $2,000, $5,000, $10,000 into it, and then maybe it starts going up a bunch right away, and I'm kind of looking out there and I see a lot better opportunities, and maybe I got an opportunity to take a 20%, 30%, 40% profit in a pretty quick amount of time. And it's a stock that I'm like, I don't really want to buy it up here. I started my position hoping it would go lower. Instead, it went the other way. And now it's in no man's land and I don't really want to build it bigger. Then I'll go ahead and sell a stock like that, okay? Now we're going to have a third major player, VR gaming. Now, VR gaming is, at the end of the day, it's going to take some sort of piece of the pie away from these three. That's just the way it works, okay? If somebody's going to spend $500 on a Quest 3, that's less money for them to spend on mobile games, less money for them to spend on PC gaming, or maybe they instead of buying a PlayStation or an Xbox, they'll buy a Meta Quest, right? So there's no doubt it takes money away. It also takes time and attention away. It also takes interest away. And also in regards to the gaming market, the more people that jump onto something else, then their friends start doing that as well, right? And so think of like Fortnite, think of like a ton of the popular mobile games. Like if your friends are all into something like a Call of Duty or something like that, then you're more likely to play it as well, right? And so if there's more and more people starting to do VR gaming over this next several years, which I think there's going to be, it's going to take a level of interest away from these three. Now, does that affect 2%, 5%, 10%, 20%, 30%? That remains to be seen. We'll see, but there's no doubt it takes some effect away. And so that's why I decided to go ahead and sell some shares in a stock I hold. And that stock is Corsair Gaming, CRSR. Now, going into today, Corsair Gaming represented about 13% of the public account, right? Which made it a much heavier position than even a stock like Amazon. Amazon, which I'll be honest, I believe way more in Amazon for the next 5 years than I do Corsair Gaming. So me having over double the position sizing as a percent into something like a Corsair Gaming versus Amazon, it just doesn't make practical sense, to be quite frank, okay? I like Corsair Gaming. I'm a believer in Corsair Gaming. I think their products are phenomenal. I think their brand is phenomenal. I think Elgato is phenomenal. But there's no doubt there's risk here, and to have 13% of the public count tied up in this, especially seeing what I have seen now in what's coming as far as VR gaming, it's just way too risky to have 13% of my portfolio in that particular stock. And so I decided to go ahead and cash out a pretty fair amount of shares today. I sold 5,504 shares of the public account shares for Corsair, which means I now have, at this point in time, 5,000 shares of Corsair Gaming. I feel comfortable having 5,000 shares of Corsair Gaming, okay? You know, for the long term here, and unless the fundamentals change massively for the worse, I feel comfortable there. At the end of the day, PC gaming, people are going to continue to spend on PC gaming for years to go in the future, years and years to go in the future, right? Will they spend in 5 years as much as they spend today? I don't know about that. We'll see. But I feel comfortable being positioned there with Corsair, with their brand, with Elgato, and kind of what they got going on. But there's no doubt I wanted to de-risk that portfolio to at least a certain extent, right? Now, in regards to Corsair, this is a minor thought around Corsair. It's not like the stock's cheap. I mean, it's trading at, now keep in mind, I wouldn't be surprised if Corsair comes in with much better numbers on the EPS side than what analysts are expecting based upon shipping rates, how much those have come down, trucking rates. Obviously, Corsair is shipping physical products all around the world, right? And so I actually expect EPS to be a little better than the analysts expect, but nonetheless, folks, the stock's not cheap. It's a hardware company at the end of the day. It's a hardware company, and it's trading at about 25 times 2024 numbers. So from that context, it just made sense for me to cash some of these shares. The stock's trading rich, for what it is for a hardware company, and I needed to de-risk, okay?